Hey, future millionaires! Big news just dropped from the Bank of Ghana that could completely change the investment game in this country. What if I told you that you might soon be able to own a piece of Fidelity Bank, First Bank, or even your own local bank? No, this isn't a takeover. It's a massive opportunity that the central bank is creating. If you've ever felt like the stock market was only for rich people in suits, this news is for you. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. So here's the deal. The Bank of Ghana, BOG, which is like the big boss of all banks in the country, has given a new directive. They are strongly encouraging banks to list on the Ghana Stock Exchange, GSE. But what does list on the stock exchange actually mean? Let's think of it like this. Imagine a bank is a giant, private, family-owned bakery. Only the family members can own a piece of it. Listing on the stock exchange means that bakery decides to sell slices of its ownership to the public. These slices are called shares or stocks. So when a bank lists, it means you and I can go and buy a small piece of that bank. Becoming a shareholder means if the bank makes a profit, you might get a share of that profit through something called a dividend. Now, why is this such a big deal for us as potential investors? Two words, opportunity and undervalued. First, it creates more investment opportunities. More banks to choose from means more chances to find a good one. Second, and this is the exciting part, sometimes when companies first list or are pushed to list, they might be undervalued. Undervalued is a fancy word that simply means the stock might be selling for less than what the company is actually worth. Think of it like finding a brand new iPhone in a market, but the seller doesn't know its true value and is selling it for half the price. That's a steal. The Bank of Ghana believes that many of our local banks are strong and profitable, but their true value isn't being recognized because they are privately owned. By forcing them to go public, their real worth might be discovered. Now, before you get too excited and start counting your future millions, we have to talk about the other side of the coin, risk. Just because a bank is listed does not mean its stock price will go up. The stock market goes up and down. A bank could have hidden problems. The economy could take a downturn, affecting all banks. The initial price might be too high, making it overvalued from the start. This is why you should never invest money you can't afford to lose. The BOG's move creates a chance, not a guarantee. So, the Bank of Ghana's directive is a powerful move that could unlock huge value in our financial sector and give regular Ghanaians a chance to build wealth by owning a piece of our strongest institutions. The stock market is risky. Always do your own deep research or speak to a qualified financial professional before investing any of your hard-earned money. Now, I want to hear from you. This is a huge moment for Ghana. What do you think? Would you invest in a Ghanaian bank if you had the chance? Which one and why? Let me know your thoughts in the comments below. Let's get the conversation started. Like, share this with a friend, and follow for more simple finance breakdowns.